Namaskar. Hello and welcome to 𝗑𝗙 Guru's channel. I'm your host Sree Iyer. This is a special session with Sridhar Chityala ji with so much being talked about tariffs. This is not the end. This is just the beginning. There are many and undercurrent that are going to flow underneath this. Also, there are a set of conditions that are about to affect India as well as United States and in fact the whole world. And a lot of stuff needs to be taken a little bit more in depth, and that's what Sridhar Chityala is going to do today. He is going to help us understand some of the strong tides that are working against Trump and the United States in general. If any other president was there, he would have had some similar challenges. So let's welcome Sridhar Chityala ji. Sridhar ji, namaskar and welcome to 𝗑𝗙 Guru's channel. How are you, sir?
Namaskaram ji. Very good, very good. Very happy to be here talking about a very controversial topic which is raging across the world. And, there are different perspectives and different views. I think Trump very systematically tried to make his case, but let's see what happens.
Yes, indeed. And we're going to try and make sense of that, viewers. Here we go. We're just going to have a small slide deck, just 4 or 5 slides. Tariffs are ahead. We know that. Sridhar ji, this is the table, essentially giving you the numbers. Don't have to worry about it, sir. I'm just going to give you the important ones. China is 37%. India is 27%. It's 26 here, but they've upped it by 1 more percent to 27%. However, as far as India is concerned, pharma has been exempted and a few other sectors have been exempted. Others will have to take the hit, I guess. Now, this is one thread that is going. There has been talk that there is going to be a free trade agreement between India and United States. That is progressing quite nicely. Thank you very much. That's also happening. The fact that that did not happen before the tariffs got imposed is because that's very detailed. Every line you go and look at every little thing and see how the thing can be, you have to agree on a broad set of issues. That's also happening. Viewers, if you haven't seen the morning edition on mine, this is what I was trying to explain to all of you. So, Sridhar ji, you have this slide deck. I'm going to start from this. Over to you.
Yeah, great. I think just if you can give me a second of the prior slide, that'll be great.
Yes.
Right. Now, this is the slide that President Trump used in the White House to make his case country by country. He demonstrated how much the tariffs was levied against United States and what were the tariffs that United States had against those respective countries. And he was basically making a case that all these countries were effectively eating America's pie. So therefore, on one side, I mean, the sweeping statement or the big statement that is being made is the Chinese farmers lent money to us, and then we, using that borrowed money, we were buying stuff from China. This is the consequence of a huge economic impact, and this has been going on, and this is not a fair approach in terms of doing trade, and we need to reset it and bring our jobs back, as well as to give free and just kind of treatment to the US taxpayers. This was the basis that he tried to explain. Now go next slide, Sriji.
Sir.
Okay, so now what's the consequences? There's tremendous rumblings around the world. Not only the countries, China, Japan, Korea, Vietnam, many countries have started to rumble, including Euro, notwithstanding the fact Euro had only 20% in terms of the tariff percentage, right? And they said that, okay, if Trump is going to reset the world order, then we are going to put countermeasures so that, we can respond to Trump's kind of a threat. So as a result of this, what we are beginning to see in the markets is, for the first time, the futures is below 4%. You remember, we have been tracking through not only DGI, but other programs that we have covered, the rate range between 4 and 5%. It is now dipped below 4%. It's around 3.9%. We'll explain why, where this is going. Okay, unemployment, which was an impediment for the Fed governor. Now that's beginning to rise as a result of the Dodge layoffs, but currently the unemployment is around 4.2%. So which means the unemployment rate number has also kind of a little bit ticked up. All this as a consequence of the tariff war that has started, or the tariff rationalization, which is what the Republicans are calling it. Now, the difference between the current administration of President Trump versus the prior administration is that there's a much more holistic kind of a coalition between the Republicans in the Senate and in the House. There are always some rumblings. You have the usual 5 or 6 that includes, Mitch McConnell, Lisa Murkowski, then you have Mitt Romney and a couple of others. These senators generally tend to align with the Democrats in terms of the economic policy approach. Barring these 6, you find that there is a general kind of consistency that the United States must stand behind President Trump, and this is an agenda that they must kind of move it forward.
Thank you, sir. And viewers, I want to share one important piece of information with all of you. I think today, Tucker Carlson did an interview of Treasury Secretary Scott Bessent. And he said that, look, in the previous term, Trump had imposed 20% tariffs on China. And then he said the net rise in the cost of that 20% tariff increase at the pump or at the market, at the counter, at your grocery store was 1.7%. 1.7%. 20% rise translated to an increase in 1.7%. All these things about, prices are going to go through the roof are overblown. And he explained how he gets to that 1.7%. You should just take a look at that video. I'll put that link in this after the session finishes, because it's important to understand the past, so that we know what kind of a trend there is going to be. Sridharji, next slide, sir.
Yeah, just to finish up, excellent point that Sree made. We covered it. It's less than 2%. The impact of those 20% was less than 2%. That's 1.7% is what she is pointing it out. And we covered this in the last session. It was absorbed and passed on to the customers. So the customers, without blinking an eye, took it. But it had a consequence. It's not just, you're looking at it in isolation. The rates came down. We'll show later in the program. The rates came down, particularly in the prime lending rates came down quite dramatically, which got passed on. Not only the energy saves, but the prime lending rate came down, that got passed on by way of mortgage rates. So that consequence was felt. It's mostly the left-wing media which is rumbling and rumbling and rumbling, making a free ride and creating a narrative which is inconsistent with the true economic story.
Thank you,
Next
sir.
slide.
Over to you.
Okay. As rate futures slide, will it force Powell's hand? Now, Powell has been saying, I'll not cut rates because inflation is looming. The same point that he made, the same point that was made, and we'll show it in the 2019-2018 slides. So he's saying, will it force Powell's hand? Powell has been steadfast, but his options are limited. What's he going to do? Is this the Trump's game plan, which is what he did in 2019 when Fed refused to cut rates? Actually, they increased the rates. The rates went from 1.5 to 2.5. Then he forced the Fed to cut rates, and the rates came down within 6 months in 2019 from 2.5% to almost 1.5%. And what the market pundits, you can go and do your own research. You'll find that they said this is as a result of COVID. COVID didn't come till 2020 March into United States, where you
Correct.
see the rate going down from actually 1.5% or 1.75% to 0%. That is March 2020 to almost September 2020 when the rates came down. The 2018 to 2009 rate reduction was as a result of high rates, and the credit expansion didn't happen, and the small businesses and large businesses were impacted without any kind of rationale for rising rates at that point of time. So that's the game, I believe, that Trump is playing, which is to say, cut the rates. Today, if you see the headlines, the last 2 hours, if you see the headlines, that Trump is saying the rates have to come down, whereas Powell is saying inflation is looming, so I'm not going to cut rates. So this is the same battle that is coming up. So with tariffs in play and a potential rate cut of over 2%, is this the boost the industry needs? because the markets are factoring in. I repeat, the markets are factoring at least 4 rate cuts this year. In 2025, 4 rate cuts this year. So is this the game plan that is Trump playing, which is to say, you're not cutting rates, the rates is greater than 4%, you got to bring this back because the industry can't afford this. That's on one side. Second, I'm going to increase the tariffs because I have double taxation. One, my own country through Fed levying the taxes, and second, the tariffs imposed by the importing nations. We can't have this. So he may go with a policy of trying to get the Fed to cut the rates and at the same time negotiate with those countries which wants to negotiate with the United States on these reciprocal tariffs. So interesting story. I think this seems to be the broad game plan. He will not concede, notwithstanding what his policy advisor says, unless he sees some progress on both these fronts.
Sir.
So what are the factors factoring in? I just covered volatility and supply chain recalibration. There is no doubt there's going to be supply chain recalibration. The volatility will prevail, driven by various kinds of market forces. And those of you in India may be familiar how certain groups or certain research houses were set up by the left wing in India and how they were hacking the Indian market. The moment Trump came, they disappeared. They no longer trade, they no longer work, or they no longer operate. I'm sure they will come back should there be another left-wing administration. So according to them, the era of free rides is over. Many of you pumped your economies because you imposed tariffs to protect your domestic markets, while you asked us as part of the free trade agreement to cut tariffs so that we can begin to export to you. So that is over because it has to be reciprocal. Now, in terms of what's happening is the portfolio positions, this is in the markets, the portfolio positions are shifting away from equities. You will see that in 2025 or the next 6 months or 9 months or the whole year, you may see more and more movement away from equities into the fixed income where the volatility is still kind of less, but there is going to be 4 rate cuts people need to factor in. But there's also a movement towards gold and precious metals and rare earths. So this is where the markets are. This is how the markets are now saying that they're going to recalibrate their positions in terms of the uncertainty that is prevalent in terms of who is going to negotiate and who is not going to negotiate on this tariff issue.
Thank you, sir. And as things stand today, I think the interbank lending rate is 4.75% today.
No, 4.25 to 4.5.
Oh, 4.25 to 4.5. Okay.
Yeah.
Okay. So four rate cuts, even a quarter point would be like 3 point. It'll come down to the 3s, probably.
It'll come down to the 3s, which is the reason why always look for the treasury futures. The treasury futures is around 3.9% right now. 3.9%. Okay. The moment you have the first rate cut, you will begin to see. I believe the band will be somewhere, as you rightly said, Sree, somewhere between 2.75 to 3, long way from where we are right now. And that's a significant kind of impact in terms of this net savings to the customer. The other thing that we haven't covered, which we'll probably cover, is that the OPEC countries are increasing the production and cutting the prices. So you're beginning to see the oil starting to flood the market. Oil prices coming down. When I say oil, the energy prices coming down. So that's also going to be a big savings in terms of the impact to the economic impact to the customer. So you're going to see rates. You're going to see energy prices come down. You are going to see other forms of incentives kind of kick in by way of taxes. And, he's saying this is how I'm going to play the game for an average American. Right now, the opinion polls support Trump's policies because it is directly affecting them on this specific economic issue. Remember 2 things. One is economics. Second is security and illegal immigration. We'll cover that on another day, but this is the one that he's addressing on the economic side of the situation. So recession fears are growing. JP Morgan in its today's report says there's a 60% chance. But let's tell you why, that may not happen as yet. US has just revised its economic growth from 2.1% to 1.7%. You really need to go to 3/4 of 0%, for it to be, or negative growth for you to call it as a recession. Now, as far as the global economic outlook is concerned, from about 3.2%, it's coming down to about, again, 2.7%. So right now, as the economic indicators are concerned, factoring in the tariffs and the flow of economic activity, there is nothing yet saying that there is a doom and gloom out hanging in the horizon. The era of integrated economic measures is over as Trump pushes for MAGA, Make America Great Again. What's an integrated? You remember that in the COVID era, so European Central Bank will cut rates, then proportionately Fed will cut rates, and then that gets passed down to the emerging economies. The emerging economies will cut rates so that there's not a significant rate differential. I think that period is more or less, we are drawing to a close, where US is going to say, I'll cut rates based on my economic situation. And if you want to be part of it, great. If you don't want to be part of it, that's fine. As far as this is also pushing new types of partnerships, which was again emphasized by Trump. He spoke with both the prior Shinzo Abe and the current Japanese Prime Minister, and he said that they are willing to be accommodative. Another country which has got the highest tariffs on US, 92%, they have come and said, which is Vietnam, we are willing to negotiate with you. You're going to see more and more countries will rebalance their tariffs so that there is not a significant economic downside to those respective countries, preserving the partnership. I believe India will do something similar.
Thank you, sir. So one question for you. People say that, okay, so Vietnam has 46%, China has 34%, and now China has actually doubled its import duties to 34%. I mean, they were at 68. I don't understand this. Did they decrease it from 68 to 34, or what is the deal there? I don't know.
No, they've added additional, they've added additional 34%. They've added the additional 34%. So the story is that, China has always protected its markets, which is the reason why they did it in two ways. One, keeping the renminbi relatively weak against the other currencies by fixing the renminbi at the Chinese central bank level, Bank of China. And then the second is they put tariffs on other countries which wanted to export to China. Okay, they always wanted to promote China as the exporter of stuff and producer for its own consumption, rather than it being accommodative as per the free trade policy. So there has to be bilateral kind of an agreement. China was never, they could never enforce it, and China was able to successfully maneuver this because of everything that everybody knows about the way Chinese transact with many nations. You take the case of India. What is the exports of India to China relative to imports? Effectively, they destroyed everything. From consumer basic.
They only get raw materials from India, and they sell you back finished products.
Very, very small, very small. The differential is significant. The net trade differential between China and India is significant, as significant as United States and China. It's the same with all other countries. China has got trade surplus with almost every country in the world by virtue of its what we call as a carrot and stick approach, right? In terms of enforcing its policy. Now the question is, where does this leave Trump and his economic advisors if the markets continue to kind of turbulate? Now they have a set of policies which is effectively saying, we have been given an agenda and this is what we are doing. But what they can't predict is what Trump is going to do as he tries to negotiate with various people. So only person who knows where this is heading is President Trump himself. He has a firm, and this is the unpredictability of Trump that gives him both the advantage and disadvantage. The advantage that he has here is that nobody can predict him, so therefore they can't come up with a specific strategy as to how to combat President Trump unless they have a direct dialogue with him. So will there be compromise on reciprocal tariffs? Of course, there will be compromises on reciprocal tariffs. So the net impact of all this is, the net impact, as I see it, the net impact of all this, you're going to see even at the end of all these kind of negotiations and discussions, if the rate comes from 4.25 to say 3%, and if the average tariffs comes from today, whatever, 40, 45, 50% to 20 to 25% after the negotiations, then Trump has got his agenda and he's got his economic victory in terms of saying, I cut the rates, I cut the tariffs. So your dual taxation, one is on the rates, the second is on the taxes imposed for importing. I have addressed, and I will commence bringing some of the high-end manufacturing jobs. We lost all of the high-end manufacturing jobs. We will bring in. This is the reason why auto industry has been targeted. Auto industry is one of the largest employers. At one point of time, they had 14 million people employed in the auto industry in United States. We gave you a chart as to how much of it has shifted to Mexico in the last 3 years in terms of the volume of cars as well as the imports that were coming in from that country, casting substitution of jobs in United States. So there's a lot of data that is behind this story, but nobody wants to have, because their portfolios are getting affected. They don't want macroeconomic shift, which helps United States, but that's exactly the issue that Trump is trying to kind of solve. So bring back, and similarly, you saw that one of the first things that he did was he told Japan, hey, I'm not selling steel, but I'm willing you to put capital in and re-energize the industry. Taiwan,
Nippon Steel.
Exactly, Nippon Steel. Taiwan, hey, you're imposing tariffs, but I've helped you both geopolitically as well as economically. Build those factories not in China, but build the factories in United States. And, if you want capital, I'll give you capital, but you have enough capital because you're doing enough supply in United States. Again, this was a point that was made in the press conference, which is to say, Taiwan is coming. They are going to build the semiconductor factories in United States. The high-end engineers will be hired from United States into those factories, and we'll manufacture what we need rather than Taiwan manufacturing in China and we importing from China the more sophisticated chips. That obviously impacts both the AI as well as the many electronic manufacturing industries, and most notably the auto industry.
Thank you, sir. Now we have this left-leaning media and markets. See, I'm watching all these things, and out of 5, 4 are like that. Only 1 is trying to give a correct picture of it, probably even pro-Trump. But if you look at the number of people who are supporting Trump on social media, it's mind-boggling, Sridharji. I saw Kimberly Guilfoyle's videos, and as well as Lara Trump. Both of them very good hosts. So this is the way to go, viewers. Someday, who knows? I might be also recognized, but be that as it may.
You'll always be recognized, Sree, and I'm sure we'll get a recognition, sometime end of April to you.
and we are getting ready for exciting times. Sridharji, one question I have is, Trump wants to restart shale-based, all the drilling that was happening. And if the OPEC is starting to overproduce, this is the last slide, so I'm just going to close that. We can always go back to that. So US is aiming for something that will not be below $65. If I remember, $65 a barrel. But if OPEC starts overproducing, could that number be lower? Because again, it puts pressure on shale.
$50, G, not 65. They're looking 50. At $50. Okay. Yeah, 50. They're looking at 50. And I think that I will not be surprised if we're going to hit $50 at least for a period before it kind of gets to $60. Oil futures 26, 27 is factoring in an average kind of barrel of $62. $62. Okay, remember guys, we put economic slide, we're talking about $80, $75 to $80 a barrel, and that going to $62 a barrel. Oil importing countries are going to significantly benefit. Oil consuming countries, which is, producer and consumer like United States, is going to have a significant impact. They are one of the largest consumers, along with the two well-known countries in the world. That obviously flows into the economic, outcome and the share of the wallet, or the, more cash in the wallet of the consumer. So you're going to see no more this, nonsense about all the stuff around climate. So I'm going to impose penalties and tariffs and cut production and shift to something that hasn't worked. We are going back to what that works. So which is namely what that has worked. And that's imagine oil industry also employs a large number of people, large number of engineers, people, and, and also services. So therefore, you're going to see even in that segment, expansion of jobs, high-end jobs in the refining, exploration, and distribution, in conjunction with other industries like semiconductor industry and auto industry and steel and so on. So this is the whole game plan, not to bleed the balance sheet of United States, not to borrow and cut off all those things that produce economic outcome to United States, which has been the policy of the past 4 years, if we just look at the raw data.
Thank you, sir. And one small question I have for you, Sridharji. The 2 days, the correction, stock market correction has been pretty big, drastic. But the ones that have lost value, most of them happen to be the Max 7 stocks. This is just an empirical observation. The reason is these are the ones that went up to stratospheric valuations, and then they are now coming down with a thud. The Teslas, the A's, Alphabet, Amazon, Apple, and so on and so forth. Now, somebody asked me a question, and I said that you look at the P over E, performance to earnings per share ratio. These were really, really high for these companies, and that was one big reason why the thing is adjusting. But there have been a lot of pushback. In your opinion, why do you think that part of the market is overcorrecting, I should say, than the rest of the market?
Well, I think first and foremost, one of the areas that the market sentiment, which is animal spirits, is that wherever you have high valuation, high PE ratios, you will see that they get impacted. That's the first. The second is, what's the discretionary versus what is mandatory expenditure. Many of the consumption items around the tech are discretionary, right? So therefore, when you have a lot of money, so you're going to have the amount of capital deployed in some of these things are going to be both on the consumer side as well as on the industry side, not buying more of the stuff. So that flows into the revenues of these companies that you kind of listed. So that's the reason why you have correction in those segments. Quite a few of them also import stuff from China, which is heavily kind of going to be impacted as a result of not only China, Taiwan, Vietnam. All these countries are suppliers and consumers for some of these big tech industries. So hence people are looking at the consequences of the tariffs to those countries. If they don't negotiate, what will it do to the cost of producing and cost of delivering, and what the margin compression will be in some of these companies. So these are the consequences that are playing into Sree.
So before we go to viewers' question, I have one last question. Bear with me, Sridharji. Say there are countries like China. China will use every trick in the book to sneak below this. One of the things that they can do is to try and force a country like UK, which has only 10%, to re-export. In other words, China exports it to UK. UK is like a pass-through, and then the tariff will become 10% instead of the 34%. So how does the Trump administration plan on tracking this?
Well, I think it's a great question. I don't believe they've got to that. They only got to 3 countries. which make up 1.2 trillion of the 3.2
Yes.
trillion, are Mexico, Canada, and China, right? So once they will be looking at those charts as we did, and seeing which are the countries which are ticking up and which specific sectors that are ticking up. So those are the numbers that they'll be looking at in making their judgments and decisions. Hey, you're circumnavigating this. This is the problem that ASEAN itself is having, because China is sending stuff to Vietnam, Cambodia, and Laos, and they in turn are supplying to ASEAN as part of the ASEAN agreement. As a result, some of these countries like Vietnam, Thailand, Indonesia, which also are in manufacturing, and Malaysia are impacted. How ASEAN is going to deal with this issue, forget United States, in terms of their own economic recalibration, is an interesting challenge that we are going to witness. And this is the reason why we're going to see change in this whole geopolitics and the relationships emerging. But that's a great question, and let's wait and watch as to how. They've already done for 3 countries and sectors. They've identified the sectors. Okay, in US, they've identified the sectors. That is why they targeted those 3 countries and went after.
Thank you, sir. Now let's take a few questions, if you don't mind, Sridharji. First question is from Ramchandran. Is this strategy to open up new markets for American products and increase volume significantly? Imagine 2 times more annual exports of Tesla, Bourbon, etc. to just India and ignore EU, Canada?
Well, I think that their whole boost is that they've kept 2 things separate. One is they want to increase the manufacturing. They want to lift the manufacturing, bring back manufacturing and jobs to United States. And okay, if India says it'll buy more, no problem. If someone says they want to buy more, so it's absolutely correct. Mr. Ram Chandran's question is very correct, which is to say that yes, their strategy is to reshift. We produce and you take. You produce and we take, but it has to be fair and just. I think that's the way we are going. So what does it do? It disrupts not only the banking system, it also disrupts this whole global trade, which was a bunkum. I mean, right from the day China entered WTO, there's not been one single enforcement on any violation, not against any, only they pick up some random countries like Iran and impose sanctions, but no sanction imposed on China.
Thank you, sir. Next question from Shanks. US is taking gold from UK. What is happening to India's gold kept in UK? Will India be able to get it back?
Oh, India is already moving gold from UK. I think everybody knows that. It is bringing back so that it can, it has its reserve under its control. And it doesn't want to have, under circumstances, when things are not favorable, it's gold locked up in a vault, which is not in its control. That's exactly what US is doing as well, which is bringing back and looking at the whole holding of the gold assets at Fort Knox. And hence an audit was sought. We covered this in one of the shows, Shriji.
Yes, indeed. Next question from Shyam Tarun. Thank you so much, Shyam. What is the future regarding chip manufacturing in India?
I think it's very nascent. It has just started. These things take, Sree is an expert on semiconductors and fabrication fab forms. So he can further expand, but these things take a lot of time and tremendous amount of capital. Most of these fabs have a very limited lifespan of, I think, between 3 to 4 years, not even 5 years. Some of them even have 2 to 3 years before the next technology kind of comes. So is India able to put that type of capital, or will it partner with TSMC and other people? Time will tell, but certainly the movement has begun.
Well, the thing that would have to happen, Shyam, is that I would say about 1,000 engineers working in various levels of chip companies, from Intel to Applied Materials to ASML to Texas Instruments to Global Foundries, AMD, NVIDIA. All these people will have to come back to India to set this thing up. Setting up a fab is not easy. It will take years, and all of them would probably want to get some good payback out of that, like for example a startup company there, and then good ISOs and things like that. So India has to think big. If you give it to a bureaucrat, he'll mess it up. somebody in the government who understands how startup ecosystem works, how incentives work, will need to do that. I'm hopeful that something will happen. We'll see. So last question for today. Maithili ji wants to know, Sridhar ji, will the inflation be a short-term pain resulting in long-time gain?
I think my answer would be in all these circumstances, we have seen in the last 6-7 years, inflation is short term. I would use the word short term to medium term, but what we are witnessing is a long-term recalibration of markets, long-term recalibration of trade policies, and long-term recalibration of capital deployment, which benefits each of the nations that is at play, and the people working in those nations getting benefits, rather than using money earned by people in well-developed nations or developing nations and funding all kind of others with no reciprocal reward is the change that is to come.
Thank you so much, Sridhar ji. Viewers, we come to a close of today's program. Sridhar ji, we look forward to hearing from you very shortly. And he's very, very busy. And thank you so much, sir, for taking time out from your busy schedule to join us today. We'll be hearing back from Sridhar ji very soon. Thank you once again, sir. Namaskar.
Namaskar. Thank you so much, and have a wonderful weekend, wonderful day.